If you're new to day trading, your first goal should not be making hundreds of dollars every day. Your first goal should be protecting your account while learning how the market actually moves. The first beginner-friendly strategy is the opening range breakout. Wait for the first 15 to 30 minutes after the market opens. Mark the highest and lowest prices formed during that period. Consider entering only when the price clearly breaks one of those levels with strong trading volume. Avoid entering while the stock is still moving randomly inside the range. The second strategy is trend pullback trading. Instead of chasing a stock after a large move, wait for it to pull back toward an important level such as VWAP or a previous breakout area. Enter only when the price begins moving in the original trend direction again. This can provide a better entry and a smaller stop loss. The third strategy is support and resistance trading. Look for price levels where the stock has repeatedly reversed. Beginners should avoid buying directly below resistance or shorting directly above support. Wait for confirmation before entering. Risk management is more important than the strategy itself. Risk only a small percentage of your account on each trade. Place your stop loss before entering and target a potential reward that is larger than your possible loss. For example, risking $50 to potentially make $100 creates a 2-to-1 reward-to-risk ratio. Beginners should focus on liquid stocks with strong volume and narrow bid-ask spreads. Avoid random penny stocks, excessive leverage, and trades based only on social media excitement. In 2026, FINRA's new intraday margin system has replaced the old universal $25,000 pattern day trader requirement. However, your broker can still impose account limits and margin requirements, so check its rules before trading. Start with paper trading, follow one strategy, and record every trade in a journal. Consistency, discipline, and risk control matter more than finding a perfect indicator. Day trading involves substantial risk, and you should trade only with money you can afford to lose.